we have been discussing a lot on these different verticals on embedded finance, but I think one of the it's most valuable right now is embedded savings and how you use this kind of technology to enable users to also save. We talk about insurance, upsell, lending, but I think from our perspective, savings is like a key moment. It's like how you start, also for a journey to invest later. So yes, we have today Nuno and David. You can Google, you will know Paynest and Coinscrap for sure. So you can also present your own projects along the way. Thank you very much for this. And just to kind of put us in context, because we have been talking about on selling and marketplaces, I think we'll be starting the conversation here on what is financial wellness. And that's why we want to start on this concept of financial wellness. We'll get back to financial literacy, is always a key topic here. But I think, Nuno, I think Paynest talks about on financial wellness and how you promote financial wellness for your users. So can you tell me what is for you financial wellness and how you describe our financial wellness as in Portugal?
Sure. Thanks, António. Thanks for the invite. The financial wellness topic, people sometimes think is linked to literacy and is one and the same thing, and actually it's not. And the way usually I like to describe financial wellness is actually three components. Literacy being one of them, of course, cost of living, and then one thing which is linked to Portugal, which is a cultural element of the way we see finances. And on the first one, on the financial literacy, or in this case financial illiteracy, in Portugal we are no longer the worst in Europe, but we are the second worst, so we're very close to it. And when you think about talking to people in the Portuguese, about 60% they feel very uncomfortable the way they manage their money, and they have no comfort that we'll be able to maintain the same quality of life in the future. And a good example why literacy is not one and the same thing as the others is when you think about even professional football players. Did you know that about 40% of them go into bankruptcy 5 years after they quit playing? So this is a clear financial literacy period. That's one element. The second one is, of course, cost of living. And here we all know, we just need to open the TV. And in Portugal, with the rise of interest rates over the past 2 years, we are much more prone to the impact of this vis-a-vis another country in Europe, right? In Portugal, mortgage rates sold by banks around 93% are actually variable, while, for example, in France, only about 30-40%. So this impacts us much more. And then, of course, salaries are flat, cost of living goes up, and it creates a second big one. But maybe the last one to Paynest is very culturally for us that we don't talk about money. We don't talk about money at home, in schools, at work. We just don't talk. And if you don't talk about it, it doesn't help anyone, right? And this, we in Paynest, we try a lot to overcome that and work with big clients like Nuno was mentioning, CTT as an example, because big clients realized, or big companies realized that people are the biggest asset and they need to take care of them. And physical health is something that is already, in a way, banalized. Most companies already offer, health insurance. Mental health is a topic that is actually very openly discussed, especially since COVID. And now it's time to tackle what I call the elephant in the room, which is financial wellness. And what we do in CTT with a few other clients is to help people talk more about it, and then, of course, actually act on it. So what we give, basically, is a financial well-being one-stop shop for all the employees of our clients. That's what we do,
Yeah, I think it's, I always can carry this idea. Every time I do a panel, there's somehow a speaker that is able to insert football in an answer. But it always works.
Always football is for
But it's interesting how you can understand these different layers of financial wellness. And for sure, we also see that as the way you relate with your employees is like a key moment there. But I think it's interesting how, David, you've been working for several years on this aspect of, you have been betting on rule-based savings as a strategy to help user saving. A lot of these banks have tried similar experiences on, define rules to roundups and everything. So why have you bet this bet on rule-based savings, and how do you see the space for that in this area?
Yeah. Thanks for saying that. I was working several years.
Yeah, I know. I knew you would.
Someone called me a fintech veteran. That is super hard for me, but. Let me first complement a little bit the answer of Nuno, because I can talk a little bit about, as I'm a veteran, I can talk a little bit about the financial wellness in Spain. That I don't know if Spain is the last country in savings.
It's not, it's Romania, but Spain should be very close.
In football we are but in
again
savings,
football.
Again football, but in savings we are pretty bad. But I think the 3 points that you have outlined, you are right. I mean, literacy, culture, but I think that there is another one that is even more important than these 3 ones. That is, I always say that saving is not sexy. Saving is boring. No one wants to save. What you would like is to have the money to do the things that you would like to do. To go on vacation, to have the right education for your children. So, and that's something important, because there is in Spain, there was like one that called Personal Finance Manager. That's this app that helps you to understand your income, your expenses. You have to aggregate your accounts. They were able to reach like about 500,000 users. That is like, for a B2C company, it's like a pretty good success.
Yeah.
But these users were just registrations, because you aggregate your accounts, you see how good you are, or how bad, but then you are not joining again.
There's no action.
No, because there is boring, like having a look, because I'm pretty good at money, I'm pretty bad. The app were giving like bad recommendations, as it was your mother, like, oh, you are pretty bad this month. I mean, I know that I'm pretty bad, but I want to go to this restaurant, I want to go on vacation. I don't need like an app saying the things that I'm doing wrong, right? You need like one solution that help you to make the things right. So, and again, also like, I think economy, that's something that definitely has to be in the school. Because we used not to talk about money like in front of kids when you are talking about money. No, that's not for you. But the kids needs to know about money, because the relationship with money of the kids, they are starting younger and younger and younger. For example, I don't know if I'm not promoting any neobank here, but I'm Revolut user. I have other banks, but also Revolut. I don't know if you are aware that there are Revolut Kids, where the kids can have like, I only pay the premium subscription just for that feature. That they have these Revolut Kid things, where my kids, they can have like a card where I put in like the allowance, the weekly allowance there. I can set like tasks for them in order to trigger money, so they understand how money works. They are 8 and 10, but they are making their first payments. Actually, the boy, he bought like his first video game with money, and he realized he had like 300 euros, and the video game was like 50, and he realized how hard it is to pay like such a percentage of your money in a video game. And that's something that you have to learn by doing, not just reading a book about how you can improve your financial wellness. So yeah, definitely I think that and that's a challenge for banks, for fintechs, for neobanks, like making saving, making banking like more engaged, more easy to understand. That's a challenge that is on the table. No one has like the right formula, because at the same time you have to make money, you have to sell products, but that's something challenging. And in terms of savings, that's our case, we are trying to automate that thing. I mean, because again, it's quite hard for us to think in the long term. We used to think in the short term, like we are saving for the next trip, but we are not thinking that we are getting older and older, and we have to think that when we are retiring, we have to have money to enjoy, because when you are retired, you don't have a job. You can spend your time doing things, but if you don't have money, that's going to be a problem. So what we are doing is to helping people automate this thing, to automate savings, thanks to 2 things. Like the first one is goal-based saving, like putting a name to what you are saving for, that help you to even create different layers of the things that you want to achieve through saving, like to have this short-term goal for vacation, this medium-term goal for the college of my kids, and this long-term goal for my retirement. And we are using also saving rules. For example, rounding up your purchases when you are using your credit card, saving a percentage of your income, or even, again, football, gamification such as you can save when your favorite team scores a goal. You can save. I'm supporting Celta de Vigo. That is pretty bad team. So
there's no savings at all.
I'm struggling with savings, but yeah, again, that's something that helps you to be more engaged with your savings. And then when you have a goal and when you have automated rules, we are also in charge of giving recommendations to the end customer. Like, hey, you are 50% of your target, you are a little bit ahead of your goal, why don't you use, and now the last feature that we launched is that we realize that we are able to, thanks to artificial intelligence, that's another buzzword that has to arise in this conversation, like football and artificial intelligence. But thanks to that technology, we are able, within the transactional data of the user, we are able to understand income, we are able to understand expenses, so we are able to find right moments to put more money than the rules. So let's say that it's not common, but you have like a tax. How do you say devolución? A tax.
Like a refund? No,
yeah,
refund.
like a refund. Yeah, it's like you are paying more than you should. So they are giving you money. So that's money that is more or less like a gift to you. That's a good money to put because you don't count with this money. Or let's say that we are able to know that you have more income than expenses at the end of the month, and it's able at threshold. We are able to find this right moment and to offer this recommendation to the end customer and to put more money in this account. And we are doing that, I didn't mention, but we are doing that in a B2B model, like helping the banks. Because we tried to do it in a B2C way, like ages ago, and we realized that it's quite difficult to monetize this kind of solution. So we decided to pivot and to integrate this solution within the banks. And now we are working with 5 of the top banks in Spain. We're trying Portuguese market is getting harder for us. So if someone is interesting, I'm open.
No one wants to say here, so there's no space for that.
Yeah, that's the reason that you are like.
Yeah, that's why we're doing this panel, right? Yeah. No, but it's an interesting model. I think Portugal did the same. So we also had like our wave of PFMs and personal finance managers and open banking. You could aggregate. You could categorize transactions, but even still, like clients are reluctant to save. I think the moment in which you start saving for your kids and you help them educate, that bridge between fintech and edtech, it's an interesting moment to embed technology. We have some cases of startups at the fintech house doing so. But it's interesting and bridging so from this beginning of what is financial wellness, going to how you can embed savings in journeys from non-banking players. I think Paynest is in an interesting position. I do not want to say what's on our roadmap, but you're in the position of you have an app in your final user that is doing salary advance or not. It could be like channeling those savings to potential savings. So how do you see this potential of fintechs entering this space?
Yeah, no, I can share because, I mean, you mentioned B2C, you mentioned B2B. We actually have a model which is B2B2C, right? Which is another very good way to talk about savings, because when typically people start their financial journey with actually salary, right? And when you think about, yes, you can have, rule-based savings as you're mentioning, but the most systematic way to approach it is actually save a percentage of your income. It's what people actually should do. It's very, long term. It's not sexy, yes, but it works. And in Portugal, about 70% of the people don't save at all or save less than 10% of their monthly income. And because of our business model, we have salary embedded within the way we do. So it's the perfect entry door to start actually promoting savings. So we have, one thing is we promote a lot of healthy habits in a way that employees should think about the way they manage their salary and put something on the side. We will announce soon also a partnership that helps employees actually save in day-to-day purchases with instant cash back that can go to savings accounts. Things like when you do your grocery shopping, where you put gas in your tank of your car. So actually help people save in those day-to-day activities that need to happen in any case. And last but not least, when you think about our end client, or our client is actually the company, and the companies have a lot of pains that they would love us to help them solve. And when you think about multinationals, for example, they are able to attract and retain talent, offering, for example, very complex pension plans, that it does work. But for a normal company that has 1,000 people in Portugal, they cannot actually have the same offering. So how can we help them, and discussing with partners, how can we help them give the same offering, which is this long-term savings to their employees, as also means to retain and attract the best talent. Yeah.
But I'm deviating a bit from the script. So you were referring a bit on cashbacks. So are you expecting to become a wallet? So like, would I keep money there? I don't know if you can explain it. So because somehow you became the savings account itself, or you're just channeling to a different product.
Yeah, that's something that we're still exploring, so I'm not going to too much detail. But basically, it is since we have the app enabled people and people use it to get part of the salary early if needed to, speak with a financial coach, why not actually reward them in activities which need to happen in any case, like doing grocery shopping? And that is where we basically will announce soon a way where people can actually earn and save in those day-to-day activities, and just improves the value proposition of what we offer to the clients of our companies, the employees of our companies.
And you referred to something interesting, and I think I also want to understand what's your vision in Spain. But I want to make like a quick question first. So, can you share like who has like a pension plan right now, just to have an idea on who is currently owner of? All right, okay, all right. Because it's also like an interesting.
Can I just who is paying for it alone, or the company is paying for it? Or let me ask.
You need to ask one question.
Yeah, exactly. It could be left and right.
People are like choosing their hands.
And who is paying for it themselves? Okay.
Now I'll count.
The delta is.
That's like an interesting topic here, because I think pension plans have all the incentives, right? Like in the short term, on the long run, like you could use them either way. But somehow, it's like a popular product in Portugal. How do you see it in Spain? And is it changing how people perceive these kind of products? Yeah. Are they becoming also more digital, and are helping like players probably from the insurance side selling these kind of products?
In Spain, we have like a huge problem with public pension, because we used to have like a very good a very good public pension, like and people is used to think that
sorry.
They are not worried about their retirement. We used to think that we are covered when we get retired. The government is going to do something that we are going to be able to receive money from the public government. We are covered, and it's not right, because the money is. The government is a company. The company is losing money, and sometime we are going to run out of money for the pension plan. So you have to complement your public pension in different ways. So first they try with the private pension plans, but we have like a government that is like a little bit to the left, and they understand that having a pension plan, because you can remove taxes thanks to the money that you are flowing to your pension plan, and they decided that this is a thing that the rich persons are going taking advantage. So they decided to reduce the maximum threshold for the private pension plan from 9K, that is not a lot, 9K each year, to 100 and 500K. So the private pension plan is dead in Spain. Nobody's using it, because you have to complement your public pension plan, and you have to save for the next. You are going to live like 20 years from retirement if you are like only adding like 1,500 like every year is not enough to complement your pension plan. That at the same time is going to be lower. So what they are looking for is for the companies. The companies, they are actually managing money from the social security money is getting from your salary. So they are looking for the same solution, and that's something that works in other countries. For example, in UK they had the same problem, and they were using, I don't know if you are aware, behavioral economics is another buzzword that is now, but I am a huge fan of behavioral economics. Basically what behavioral economics say is that sometimes we are not making the right financial decisions, and sometimes we need like a nudge in order to make the right decision. So In the UK, they were working with Richard Thaler, that is one of the Nobel Prize in economy. They were looking for one solution in order to find a way to help people to save for the long term. So they have these pension plans, the company pension plans, where the company and when you are hired for a new company, you have to, if you want to be part of this program, you have to sign a paper. Hey, 1% of my salary, I would like to receive 1% of my salary in my company pension plan. And they had not good traction, around, I don't remember the number, but around let's say 5%. So they were thinking about how to improve that, and they decided to do the opposite. Opt out. Yeah. So if you don't say nothing, you are going to be directly to the program. And they increase the money flowing to company pension plans, they increase the number of people, and just to making that slightly change, that is nothing, they can solve this problem. I think that in Spain we are going to that way. We're going again to put the chart of helping people in the companies again, and not they should look inside and looking for a solution inside in the government, but that's something that is in a political speaking is quite difficult to talk about. So they are throwing the ball to the companies again, and I think it's the only way now, taking consideration the steps that they are taking.
Yeah, but it could be an interesting opportunity for fintechs also to kind of fill that space, because corporates will have to deal with that user experience to the final client. But also, and sharing this question for both of you. So, banks distribute savings options. Insurance somehow also distribute, but who else can play a role here? We already see technology related to compensation, but who else do you think can play a role here? I think from your perspective, maybe David, because you also work in open banking, that will be kind of the enabler on here. But how do you see other players making a role on distributing savings options to the final user?
Yeah, insurance definitely. Insurance, because open banking it is giving them the opportunity to play with information that they don't have access before, because actually insurance they used to use banks as the sales channel, because banks they have the contact, they have the information, the data, they have everything. So now open banking is opening a new door in order to take advantage of this data. Actually, we are working with a few insurance companies using open banking to create different value propositions related to savings or even cashback, using the transactional data to do that. There are other players. Actually, I have seen some projects related to save now, buy later. You know, the buy now, pay later. That is quite common. It was a hype a few years ago, but now there is this. I mean, it's not as engaging as buy now, pay later, because you have this reward. You have the reward of purchasing the thing immediately. This is a different way. You have to wait until you have the money to purchase your thing, but this is the right way. And
don't say it here yet.
You go from reward now and the pay later to a pay now and then the reward will come later. So it's not sexy at all. Right?
Yeah, that's the problem. But I mean, if buy now, pay later, it costs you 15% of interest. I mean, it makes more sense, because we don't. Sometimes we don't even realize how much we are paying for the credit cards.
I was trying to understand more we have marketplaces here, we have retail here. We also discussed about how Apple is allowing this kind of high interest savings accounts. I was trying to understand if banks and insurance are already in the right position, but there's more stakeholders that can be easily positioning themselves as the same savings options, right? I just want to understand if you see for example, even in the mobility sector, wallets becoming our savings options or getting cashbacks from different parts, because I'm curious to understand how many stakeholders can a user deal with, right? Yeah. You have a flexibility, you only be able to handle 4 or 5 entities maximum, maybe more. I don't know.
Marketplace. I was talking about save now, buy later.
For marketplaces.
Because marketplace they are trying. Actually, I was working with a project in Spain they were trying to set like a wallet in the e-commerce. I know also Inditex, the holding company of Zara, they were working in something like that, because everyone would like to have the control of the money of your customer, right? I mean, you can have your private wallet where you can set like wherever you would like to do the offers. You always prefer to have your customer in-house than receiving the services in other places. But it is money. So I would prefer have my money and to make the money with my money wherever I would like in my bank account, that having like the money kidnapped in some e-commerce. So if you would like to have that, you have to find a way to give more for your money. I mean, €1, it have to worth more than €1 in the wallet, in your e-commerce. And this is kind of these loyalty programs where insurance companies have. And yeah, I think we are starting with this kind of automated cashback and these kind of things that can make the wallet now is easier to set. Everyone is used to work with a wallet like outside your bank. So I think there is an opportunity, but I think no one has have already find like the sweet spot in order to get the traction that you would need.
I think just to add two comments in one is, yes, people don't want to have multiple accounts, right? That's why even for us at Paynest, we always debit everything in the current account where people get their salary. So we don't need to open a new wallet for people because people want to have multiple wallets in their pockets, right? But I think the big topic here is, again, is culturally, is not think about the share of cash being deployed in current accounts or savings on investments. In Portugal, we love current accounts. Like we all love current accounts. I'll tell a personal story in a bit, but like we just love current accounts. Why? Because we are financially literate, so we don't know how to manage risk. We don't understand risk. We think the only way to keep money safe is in the current account. We don't understand it's not actually safe, and others are not potentially that unsafe, so we don't understand it. Then, as David was saying, it's not sexy, right? A story of someone that lost all their money doing something is very sexy. People talk about it, but a story of someone that gets often 3%, 5, 6 on a compounding, or 10 with S&P 500, like on a compounding rate forever, it's not sexy. It's not a sexy story. It doesn't sell. Right?
It's sexy enough.
for me it works, but it's not sexy enough, right?
5% is quite sexy.
But people, a story that someone lost it is way sexy. So, and then last but not least, the offering of traditional banking system in Portugal compared to other geographies of savings accounts are not the most, again, sexy product, right? Typically very low interest, sometimes lock-up periods, and that doesn't actually motivate the Portuguese to put money in savings accounts. And I remember for me, the big wake-up call, so it was actually a few years ago, 2018, I was in the Middle East, living in Dubai, working for McKinsey, and I was finishing a merger of what is now the biggest Middle Eastern bank, and then actually ended up leading a project with them to grow the most profitable banking product, which is current accounts. Of course, it's free money, they can do whatever they want, and it's the most profitable banking product. And I end up actually helping the bank grow the current account portfolio. And then I look at myself, all my money was in current accounts. It was a huge wake-up call, and I changed overnight, but it was 6 years ago. I mean, it was way too late. I could have done it way earlier, right? Now for my daughter, she's 2 years old, I invest S&P for her every birthday. Like I wish someone had done it to me when I was younger.
But I think, speaking on it and trying to wrap up also, because to be on time, I think we at Fintech Solutions, we have been working a lot with banks and some insurance companies on how we can convert these savers into investors, and this reluctance to invest. You can attribute this a lot to financial literacy. Again, we're always talking about on how we are on the bottom of Europe, but why do you think Spanish and Portuguese perspective, I think we can talk as a group. Why do you think we are still struggle so much to convert? Is it only in the experience currently we offer, or is it something beyond? Do we need any kind of nudge to incentivize the savers to go beyond what's a savings account into investment? Why do you think in Portugal and Spain we are so incapable of converting these investors?
I think it's cultural. I think it's also like, behavioral economics, they talk about bias. We have like different bias in our mind that they are not helping us to make the right decision. It happens the same with the money. We have loss aversion. Like winning money, it gives us less happiness than the angry when you lose money. And it's quite easy to demonstrate, like because we are not giving the same value to the money that is earned that the money that is lost. That is lost. For example, if you I was receiving a course about behavior economics, and that example is quite illustrative. Let's say that you are having doing a tough job, and you are receiving this let's say 500 euros, right? So with these 500 euros, you are going to maybe some for savings, some for having lunch, some for wherever. Let's say that you are finding this 500 note in the floor. What you are doing with that? For sure, you are going to think in something like spending in a new watch or buying like something that is the value that we are assigning to the money that is receiving in different ways is different. And it happened the same when we are investing. We have this fear of losing money.
But it's weird to be different between. It's really a cultural topic, right? Because we are no different than the rest of Europe.
No.
Somehow we always differentiate in these kind of metrics.
But I think just cultural and literacy for sure, and we talked about it. And I think the third one is incentives, right? So most people, when thinking about money, sometimes they go to the bank or other B2C player to get advice, right? But the B2C player, by definition, monetizes the person, right? So they are there trying to sell their products. And that's why I actually work together with companies, because we believe companies sometimes have the same incentives as the person or the employee has, right? The company is not there to sell a product at all, and they want the best for the employees to strive at work. So I think it's a lot finding what is the right channel, right mechanism with the same incentives, because people feel that most of the B2C offering, they are the product. And if they can put money on current accounts for free, they won't push me to invest, and then I won't be incentivized to invest.
All right, I think we need to wrap up.